Welcome to the Wealth of Advice market update on the 25th of September 2020. It's been over 6 months now since the coronavirus really came to the world and markets had the biggest fright of their lives at the end of February going into March. And now 6 months on, we're starting to see lockdown rules starting to get retightened across the UK, across Europe and certain parts of the world. So on Tuesday night, the Prime Minister addressed the nation. Everything that he had to say had previously been leaked on the afternoon, so there was nothing really new that he said on Tuesday night, but they want to put more restrictions in place to try and reduce the amount of infections going forward. Obviously, markets around the world reacted badly to that, not just because of what our Prime Minister was saying, but what was happening in Europe as well. The Americans haven't really getting a hold on their virus rates over there, so the markets are quite worried as to what's going to happen next. That said, come the Wednesday and the Thursday, markets responded okay, and there hasn't been a huge sell-off that a lot of people might have been fearing or expecting. Yes, the markets did go down on the Tuesday, but they were positive on the Wednesday. Our Chancellor, Rishi Sunak, launched his winter economy plan, and he outlined yesterday lots of new features and points to the job retention scheme and what the support scheme is going to be going forward. 24 hours after that was announced, my initial thoughts on what I've read is that it looks okay. There is definitely going to be people out there who said he should have done more, he could have done more. But all of these support schemes ultimately cost money, and somehow that has to be repaid. It has to be accounted for. If they can identify the parts of the economy that's going to be the worst affected, and they can do things to help those and help keep jobs, then hopefully the world shouldn't be in such a terrible place in a few months' time. So over the last 2 weeks, we've been speaking with various fund managers. We had a long chat with Trevor Greetham and the fund management team from Royal London. We spoke with Legal & General Investments. I've also had T. Rowe Price on the phone, who have a real good knowledge of what's happening across in America ahead of the US election. And I'm hoping to get the T. Rowe Price people to record something that we can put on the next update in a couple of weeks' time. The main thing that we're listening or we're hearing from the fund managers is that volatility is returning to markets. Obviously, Brexit negotiations was the main story that we discussed 2 weeks ago, how the UK were about to rip up the deal that they agreed in January, and there was outrage from various governments around the world. It looks like that's gone away. I was reading this morning an article saying that because we're not hearing that much about Brexit right now, it does show that the negotiators are getting on, thrashing out a deal, and something may positive be heard from that in the not too distant future. Let's hope so. The US election, we're now just outside a month away from the US election, about 5 or 6 weeks away that is now. Who knows how that's going to unfold? Donald Trump keeps saying crazy things on a daily basis. There's a fear that he's not going to leave the White House if he loses, and it may descend into a court battle to see who actually is the next president of the United States. Markets won't like that. Markets prefer certainty. It would be great if we know by, say, midnight US time, obviously, of the day of the US election, what the outcome's likely to be. But let's just see how that unfolds. But what it is showing is that there's going to be lots of volatility in the coming weeks until we get a result on that. In other news that fund managers were giving us, they were saying how the US Federal Reserve have now committed to keep interest rates at zero till 2023. I think it could last a lot longer than that. What does that mean for markets? What does that mean for world economies? Well, low interest rates should mean that it's cheap to borrow money in whether you're a business or an individual. That can be good for economies to get them going again. They've also said that they're not going to stick to their 2% a year inflation target, and that should support the labour market and get more people working. So we now come to that part of the presentation where we discuss the performance of the Risk Score 2 and Risk Score 3 portfolios from the 18th of February up until right now. And as you can see, we still haven't gotten back to that lovely figure of 100,000 that the portfolios were on the 18th of February. We got very close a few updates ago where it was 99,951, but as you can see, we're now 98,849 for the Risk Score 2 and 98,221 for the Risk Score 3. About 1.5% down over that sort of 7 month period. Markets are going sideways. People should be appreciative of the fact that the markets aren't going down when we're hearing negative news stories. Markets are quite resilient right now. There is a fear that we might enter a period of increased volatility as we go towards the US election, as Brexit gets sorted. But hopefully once those two events are dealt with and we move on from them, it's only another 4 to 6 weeks when the Brexit information, the Brexit deal will be agreed or not. The US election will have happened. Maybe markets increase at the end of the day thereafter. And as we get closer to a vaccine, then you would hope markets will increase. Just like to show this graph again as to how world markets have performed year to date. As you can see, the American market is still up 5% since January. The FTSE 100 minus 19%. When we spoke to Trevor Greetham last week and we were talking about the performance of the UK market, he said if you were to take the technology stocks, which we've mentioned several times on this update, out of the US market calculations, the Facebooks, the Apples, Amazon, Netflix, Googles, Microsoft, if you were to take those stocks away from the US market, the underlying performance of their stock market is not a lot different to the FTSE. So sometimes we can look at the FTSE and say, well, that must mean the UK is not doing very well. It's not doing very well as a country. But if you actually look at the stocks on the FTSE 100, the banks, the oils, the pharmaceuticals, there's no technology stocks there. The world market, which is the green line, which is a culmination of everything in the world, obviously, is showing positive returns year to date. So every client who is invested via a Wealth of Advice portfolio or Royal London portfolio, Prudential, whichever company it is that we use to invest your funds with, it won't just be focused on one market. It will be a blend. So the MSCI World Index being up year to date is certainly a positive thing, and all clients who are coming to see us now for reviews are seeing 12 months year on year performance over the last 12 months. It is in a positive position in most cases. If we look at the Wealth of Advice model portfolios year to date, you can see there that the riskiest portfolio, Risk Score 5, is at the top from a performance point of view. And for the first time, the Risk Score 1 is at the bottom. The Risk Score 1 had been outperforming some of the more riskier portfolios up until recently, and that was a reflection on government gilts doing very well. But as you can now see, they are correlated in the exact fashion that they should be. The one with the most stocks and shares has done the best performance, followed by Risk Score 4, then Risk Score 3, which is the medium risk one, which sits in the middle of those. So we're happy with how those portfolios have performed. So thanks again for listening to the Wealth of Advice Market Update. Following the Prime Minister's announcement on Tuesday about more restrictions, we've told more of the staff to work from home. We have a reduced amount of people in the office on a day-to-day basis. Those clients who had annual reviews in the diary over the next week or so, we've rang a few people up who we think might be happy to conduct those via Zoom. So we can do that via Zoom, just have less people coming to the office. We will still endeavour to get in touch with those people who have reviews coming up and speak with you via the telephone or via Zoom call. And if people really need to come in the office to sign any forms, we still have the situation where we can sit upstairs and speak with you through the TV link to the interview room downstairs. So hopefully it's business as usual as far as possible. Hopefully we get through this next few weeks and the number of infections and the virus doesn't wreak havoc like it did in the early part of the year, and hopefully we can get to Christmas with positive news and positive outlook as to what 2021 will look like.